So here we are, day 3. There is a message in the chat box. Okay. No worries. No worries. All right, everybody. Well, welcome back to day 3. I'm gathering that day 1 and day 2 was not painful. Here we are with day 3. Remember, if you have any questions, feel free to stop me at any point throughout the presentation because I want to make this as clear as possible. That is definitely my goal. And fortunately, you all have been doing an amazing job at mastering the content that has been printed thus far. So we will keep the ball rolling. On day 1, we discussed what is day trading and why would anyone want to consider trading the futures market. And I went through downloading the platform, the NinjaTrader platform, which we trade on. On yesterday, day 2, we studied fundamental analysis. So that brings us to today, which is day 3. We are going to study technical analysis, and we are actually going to, hop onto the charts today. So for the duration, the remainder of the challenge, we will be on the charts. I would like for you to spend, an additional 15, 20 minutes outside of, the challenge time, looking at the charts yourself to get the additional practice so that when we come back together, you can, share your experiences, ask questions that you may possibly have so that you get all of your questions answered right away. That's the goal. We don't want, loose ends to remain untied, get those questions answered so that we can keep it moving, bridge the gaps. No one left behind. All right, day 3, technical analysis. If you would type a 7 in the chat box if you, when you are ready to go, and we will get going. Okay, I am beginning to see 7s come in, so we will get going. Your homework for yesterday was to try and pinpoint the time in which you are planning to study your charts as well as trade. So the whole point of this challenge is to actually get you going, like right now, trading right now. So you want to get off to a great start and actually continue that great start. You're moving into trading right now. So you want to begin to decide what you want to make of this, what type of effort you're going to pour into it, because whatever you put into it, that's what you're going to get out of it. Keep that in mind. That is with any and everything. As much effort as we put into it, that's what we're going to receive in return. So hopefully everyone has pinned down the time in which you are planning to study your charts and trade. I asked you to get some practice on looking at the schedules and the announcements to see if there are announcements that could possibly affect your trading schedule for the remainder of the challenge. You looked at charts for a few minutes and you were looking to see if you could recognize or discover any patterns that were occurring on the charts, and be prepared to discuss it on today, day 3, which is right now. So from your homework, what are your observations? What did you see? What did you find? What did you discover? Let's hang our hats here for about 30 seconds, a minute, 30 seconds. If anyone would like to share, what did you discover as you were looking at the charts? Did anything jump out at you? Let's see. What did you see as you were studying charts? That's a lot. You saw all of that on yesterday? Okay, Latoya, what did you see?
Okay, so I'm still noticing my hammers. Still with the hammers and the double bottoms and double tops, but now I'm just being more, I guess, aware of my kind of moving averages because I found my problem, especially at the beginning, when I would start looking for like the hammer, the double bottom, double tops. I'll be so focused in on that and not kind of paying attention to what's going on around me. So now it's just trying to pay attention to everything, get a full picture, and just instead of just focusing on one thing. Because a lot of times I do that, I'm so focused, and like say, I'll be on one pattern and something else will be developing, which will tell me the market is going to go the other way. But I'm still so focused, I'm not even seeing that. So just
Okay,
trying to just keep focusing, just pay attention, like you've always said, everything that's going around me instead of focusing in on one thing. But I'm still on my hammers and my double bottoms and double pop tops for the most part.
okay. So did you or have you tried to narrow it down, simplify it to one pattern? Have you tried that?
That
Because
would be the hammer. That's still my go-to. Now the thing
okay,
about it is, like I said, the patience thing, waiting on it to form it. I can sit here and watch it for a while, but sometimes I get just so anxious in a sense. But that's my go-to. That would be my number one still because, like you said, if I have my discipline and stuff, I can make money that way, and I have made money. But just being
absolutely.
consistent with it because, like you said, one bad trade with me can just throw me off completely, and I won't get away. So just still
Right.
working on that. But the hammer is still my go-to.
Good, 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 good. Anyone else want to share? Good, Toya, keep it going. I'm proud of you. Keep it going.
Ma'am, yes, ma'am. I refuse to give up with this Cantiza. Refuse.
No.
But I'm learning so much, and that's why I just hopped back in this week with you as well. Just to hear your little gems you dropped, just like yesterday. Yesterday, I needed yesterday. Let's just say that. So yeah,
Good, good, good.
still here. I'm silent, but I'm still here.
Keep it moving, just keep going.
Yes,
Continue to put
ma'am.
one foot in front of the other.
Yep.
You are well on your way. All right. So here we are, day 3, technical analysis. What is technical analysis? It is a trading discipline employed to evaluate investments and identify trading opportunities and price trends and patterns seen on a chart. Technical analysts believe past trading activity and price changes of a security can be valuable indicators of the security's future price movements. You will hear mixed uh, mixed descriptions, mixed everything. I'm just going to be frank with you. Everyone that has been trading for an extended period of time has a different way of going about this. There's no right or wrong, black or white. It what works for you and what makes you the most money. What's your highest probability? Where are you finding success? So those are the things that you want to continue to do more of. And when you find that something does not work for you, just cold turkey, stop it. Don't do it, just stop doing it immediately. Oftentimes that could be difficult for individuals who, the type individual that like to be right all the time. Oftentimes in the very beginning, you struggle with trading because the market will show you that you're not always right. And if you have a difficult time cutting a losing trade, that could cause you to lose a lot of money. So when you are trading and you find out that you were not right at that moment in time, cut your loss, get out of the trade, and wait for your setup to reappear. Because trading is patterns. You will see these same patterns, repeat patterns over and over again. That is why I highly suggest, stick to one trading time, especially as a beginning trader. Stick to one trading time and one pattern because you can master it. and you can see it popping out at you if you're only looking for that one setup during that one period of time in which you've learned how the market moves at that time. So learning the patterns, learning when the patterns appear, that's going to help you to be a much more successful trader. I've gotten to the point now where I can look at my charts at the end of the day, and I can almost tell you to the exact minute when my setup and when my trade is going to occur on the following day. I'm telling you, the more time you invest into this, the more profitable it's going to be for you. And you will develop these same memories, these same trends, these same occurrences simply by investing time in studying the charts and sticking to your patterns and not wanting to trade every pattern that you recognize on a chart. So stick to that pattern so that you can master recognizing when you are expecting it to occur. And then when you see it, trade it like a sniper. When you find resistance or when you meet support, exit the trade because it's telling you that you've ran your course on it at that time. In technical analysis, you will hear these terms over and over again. Moving averages, support and resistance, bullish candle patterns, bearish candle patterns, neutral candle patterns, as well as indicators. So today we will briefly go through each of those because I want to make sure that everyone has an awareness of, you're not going to master it on tonight, but I want to make sure that you definitely have an awareness of it, and you can review this recording over as many times as possible so that you have a better awareness of it, and it will aid you in practicing these on your moving charts. So as far as moving averages, let's take a look at that, what it looks like. Hang on a moment. Okay, so moving averages, this is what a moving average look like. Let me grab my arrow so that I can point to it. Looks like this. This is what your moving averages look like. And different individuals tend to use different moving averages. Again, there's no right or wrong in the number of moving average to use. You will decide which ones you prefer over others. You'll hear a lot of people discuss that they like the 5 moving average, and what that is, it will be a line to indicate where the average where the candles were for the previous 5 business day average, the average of the previous 5 business days. Say for instance, if you hear someone say 20 moving average, it's the location of where the candles were, where the market was trending, where the price action was for the average of the previous 20 trading days. Same with the 50 moving average, where the price action was, where the candles were for the previous 50, the average of the previous 50 trading days. And then you have the 200 moving average, the 18, and so forth. You can pretty much decide on a moving average for pretty much any number. Again, it would be a matter of preference or which moving averages you would like to use, but this is what a moving average looks like. And the candles will trail the lower number moving average the most times. obviously, because if you're looking at a 50, the average of 50 days, it's going to be at that point less than if you're looking at the average of over 8 days. So the candles will be closer to the 8 moving average more so than it would be to the higher number, the 50 moving average or the 200 moving average. So this is what a moving average is. And this is the 8 moving average here. As you can see, the candles are closing, trending closer to it. Right, let's hop back over to the presentation and see what we're going to look at next. Support. All right, what does support look like? If you can remember, when you are bouncing a basketball, when the basketball hits the court, hits the floor, or wherever you are bouncing it, that is support. So bouncing a basketball, when it hits the ground, that is support. Let's take a look at support on the chart and see what it looks like. Okay, so to point out support, I will use my crosshairs instead of the arrow. Support can be where any, 2 or more candles found or stopped at the same location. So my crosshairs here. If I place my crosshairs here, you can see these candles all found support at that location. And if we were looking to see at the price point in which those candles found support, we could go over and look at the price. So it said $12,086, around $12,086. We'll say that all of these candles right here found support. This type chart in which you are looking at is titled swing chart. A swing chart is really good at helping you to pick out your swing highs and swing lows. And what are those? Swing highs is where the candles found resistance. We're going to get to that in just a minute. But taking a look at your swing lows, this is where, candle found support. And when it found support there, it bounced up. Let me grab my arrow again. So the candles were trending down here, found support, and started trending up. So again, your swing chart, which has visible your swing highs and your swing lows, is a really good chart for aiding in identifying support and resistance. So here, found support, trended up. Okay, found support, trended up. So keep in mind, we buy on support, right? Let's hop back over to our presentation. So remember, support is if you're bouncing a basketball, when it hits the floor, that is support. Moving forward, resistance. What is resistance? We're still looking at the same basketball. Okay, if I'm bouncing the basketball, when it hits the floor, it finds support. But when the basketball comes back up to my hand, it finds resistance. Okay, so I'm bouncing it. When it hits the floor, that is support. But when it bounces back up to my hand, resistance. Okay, remember those two, support and resistance, support and resistance. Now we will take a look at the chart and find some instances where the candles found resistance. So let's hop back over to the chart. And I will grab my crosshairs again. So as I was sharing a couple minutes ago, the top is resistance, the bottom is support. So top here where you see where the candles were trending up, it found resistance and then it trended down. So again, it was trending up here, found resistance and trended down. Let me grab my arrow for a moment. So it was trending up, found resistance and trended down. We're trending up, found resistance and trended down. Now there's a couple other ways you can find resistance. One is there's going to be a number of indicators that you can use to find resistance. You can use pivot points. Here you can see where the candles were trending up. There will be times when it finds resistance at the pivot point. Not every single time it will happen, but these pivot points here are good indicators of support and resistance. This S is support. So this is pivot support 3, pivot support 2, pivot support 1. The R is your resistance pivots. I want to put it to where you can see the R's and the S, you know, at the beginning when the market restarts at the evening time, it tend to move a tad bit slower. So I was hoping that these move over within the next couple of minutes so that you can really see your R's, which are your resistance pivots. Let me grab my crosshairs again. Another way of looking at support, of resistance are the top lines for this chart here, the swing chart. Only the swing charts will have these. Another way is taking your crosshairs and placing them on top of the candles, checking to see which candles stopped at resistance at the same area. So this is another way to identify resistance by using the crosshairs. Using your crosshairs, finding resistance where 2 or more candles were trending up and stopped at that same location, like this candle here, these here. The swings are really great at helping you to identify it. These swing highs here, this swing high there, you can see where the candles were trending up, found resistance. Okay, so keep in mind, resistance is when the basketball bounces back up to your hand. Support is when you bounce the basketball and it hits the basketball court or the floor or wherever you are bouncing your ball. Okay, let's see. Remind you of crypto charts. Okay, great. Yes, so as a matter of fact, here is the Nano Bitcoin chart. I have a little more different indicators on this one. So if you've been watching the Nano Bitcoin chart, you can use it too to find support and resistance. And the thing about the Bitcoin and Nano Bitcoin, it closely follows the NASDAQ. So if you trade the NASDAQ and if you are very familiar with how the NASDAQ trends, you will do well on the Bitcoin, trading the Bitcoin chart, or you should, and vice versa. If you have followed the Nano Bitcoin future chart, you should most likely do well with the NASDAQ chart because they trend very close together, very, very, very close together. Myself, along with a few other analysts over at NinjaTrader, have followed and studied and compared Nano Bitcoin and Bitcoin futures to the NASDAQ futures, and they closely, very, very, very closely follow each other. So keep that in mind. So that's resistance, where a few candles, 2 or more candles were trending up and all stop at the same location. They found resistance there. You can use your crosshairs to find those points. You can use the swing highs of the swing chart. You can look at the resistance of the pivot point. All of those indicators give you resistance. All right, so that's resistance. Let's keep it moving. Let's hop back over to our presentation, see what we're going to look at next. All right, so something else that we look at when we are trading, and we tend to place a lot of emphasis, a lot of focus on these, as a matter of fact. So candlestick patterns with signals, candlestick patterns with signals. Bullish patterns we buy, bearish patterns we sell. Neutral patterns we typically wait because we don't know which direction the market is moving. And this is just a few of the candle patterns, like the major ones. If you know these, you pretty much know them all, because the other ones will be just a variation, additions to these. So this is bullish engulfing, which is a bullish candle pattern. So we buy on this. Bullish engulfing means that this huge green bullish candle totally engulfs the previous red bearish candle. And then the bearish engulfing is the opposite, which is a bearish where we sell. The huge bearish candle totally engulfs the previous bullish candle. So it was the market was trending up, and then this strong bearish candle engulfed it and sent the market back down. So here's my favorite pattern, hammer. And I just love trading these. This is what sticks out to me on a chart, and I definitely take advantage of it when I see it. So these are hammers. You can see it looks like a hammer from your house. It has this long wick. The wick has to be at least, at minimum, double the size of the body of the candle. You see this small body, but this long wick. That's a hammer. Morning star looks like this formation. Dark cloud cover, trending up, but trended back down in the same direction, in the opposite direction, where the bearish candle closed at least halfway below, halfway the middle of the previous bullish candle. So the bearish candle has to close below the middle of the previous bullish candle in order for it to be classified dark cloud cover, and that's bearish, so you sell it. Shooting star, which I refer to as inverted hammer, because it's pretty much the opposite of what you see here. This upside down, inverted hammer, which is bearish, bearish signal, which we sell. Hanging man, trending up, found resistance there and began trending down, so you sell. And the rising man, it was trending down, bearish, found support there, and then trended up. So again, for candle patterns, what you want to remember: the bullish patterns you buy, the bearish patterns you sell. The neutral patterns you wait for an indication of whether it's going to trend up or trend down. So for the neutral patterns, that's when the market just begins to trend sideways, and you have to wait to see what's going to happen. That's when you definitely want to exercise patience, discipline. So bullish patterns we buy when it's trending up. Bearish patterns we sell when it's trending down. Neutral patterns we wait. Stop sign. Stop. All right, so what I would like to do now is look at these patterns for about, just take a look at them for about 30 seconds. And then we will look at the 3 to 4 candles forming to see if we can identify either of the patterns forming, and or if you can identify these patterns that have previously formed in the chart. So let's see what sticks out at you, if any of these patterns stick out at you. So we'll hang out here on the chart for maybe about 10 minutes to see what patterns you are able to recognize. So let's hop back over to the chart. So on this chart, are you able to identify any of these patterns? Can you identify any of the patterns? I'll put the patterns back up there so that you can see it. If you can, let me know. You can unmute and let me know if you see any of the patterns that are on this chart. And you can even watch over here to see what is currently forming on the live chart, or if you see any of them in here, let me know. What do you see? Let's see, so we'll give it about 9 minutes since we are on a 3-minute chart. Let's see what forms. Does anyone see anything? What about the previous 2 candles?
I see the inverted hammer.
Okay, so right here.
Yeah.
Okay, and then here, is that a pattern? We can definitely,
The bullish, the engulfing.
absolutely bullish engulfing, and we can also see it found support on this R2 pivot point. Okay, let's see if we can find another pattern, identify another pattern. And while you are studying your charts 5 or 10 minutes in the afternoons, don't be afraid to go ahead and press your buttons. You're not going to break anything. Just get a feel for what the trade looks like. So make sure you are doing that. Don't worry about breaking anything. I saw that trade forming and I just had to take it. Let me see, Cheryl, I bet you can tell me why I took this trade.
Order filled.
Cheryl, you should be able to tell me why I would take that. What do
It's
you see?
the bearish engulfing. I can barely see your chart though.
Oh, really? You can't see it too well?
No.
Okay, let me see if I can make it larger. How about now?
Okay.
You should know
Oh,
enough.
your stochastic is at the bottom.
Absolutely. And what else?
Oh, let me see. You had a bullish engulfing candle too forming.
Okay, so what two main things that I look at?
Your stochastic and then your moving averages.
So
Cross.
what exactly? All right, so what you see it there? You can see it better now.
I can. It's a little. It's still small.
It is still small on your end.
But remember, I need some glasses, so don't pay me no mind.
Okay, I'm gonna need for you to go ahead and take care of that.
Oh, I already did. It's still my prescription's still wrong. But anyway.
Goodness. Oh my goodness. Well, you definitely want to take care of that for sure. Okay, we're going to keep it moving. I just wanted you to hone in on some of the patterns and recognize that they actually appear on the chart. And if you keep in mind, again, buy the bullish patterns and sell the bearish patterns. All right, let's hop back over to our presentation. So indicators are statistics used to measure current conditions as well as to forecast financial or economic trends. In the world of investing, indicators typically refer to technical chart patterns deriving from the price, volume, or open interest of a given security. On the NinjaTrader chart, we have so many indicators. You will find that you will tend to gravitate towards one or two more so than any others, and then you'll stick to one or two and use those to form your trading setup in which you would use in your daily trading plan. Now, I have my favorites. You develop your favorites simply by studying the charts and finding the ones in which you are having the most success with. Of course, you want to stick with those things that you find that are actually work for you in your trading. And those things that do not work for you, do away with it as quick as possible. So keep those things that work and do away with those things that do not work. I will show you all the indicators that you have available on the NinjaTrader chart, just so that you can see, like, it just opens up a completely different world based on what you decide to add to your chart. So let's hop over to the chart for 1 or 2 more minutes and look at some of the indicators. As a matter of fact, what I will do is share with you a couple different charts that I use so that you can see how I use different indicators based on the different charts that I am using. So let's take a look at some charts. Hop over to the other screen. So here is the swing chart. And I use the stochastics, a couple moving averages, and pivot points on this chart. Okay. This is also a swing chart, but on this one, as you can see, I have push it over a little bit so that you can see it. I use the point of control along with the value areas, okay? And this is what sessions of a point of control looks like. Okay. Now I'm going to share another chart with you. Show you a completely different look. Gonna switch screens again. So here's a completely different one. This is not a swing chart at all. This is a regular chart with quite a few moving averages on it. Grab my arrow. So it has a lot of different moving averages along with the stochastics. So as you can see, your charts can look totally different based on the indicators that you add to it. Here on this, it lists in this box, those are all different types of indicators that you can use on your chart based on your preference, based on your trading style, based on what you've used and found success with. I narrowed mine down to the ones in which I found success and I stick with them. You will find that your indicators are good in helping you to identify the patterns that are reoccurring at certain times of the day. I like to trade. You'll see, let me see, I think on tomorrow, like see it as if then type situations. Like if this happens, then there's a high probability that that will follow it based on the patterns. So these are all different sorts of indicators that you can add to different charts. You would want to use one indicator for a specific reason. You don't want to use multiple indicators that explain and highlight the same thing. That's the key. Do not use multiple indicators that tell you the same exact thing. Okay, so let's see. We'll go back over to this other chart just for a second and point out two things here. So this is one swing chart using the value area point of control, whereas this is a swing chart not using it. Also, your personality ties into how much you actually, how much information you want to see, what you are trading, your trading goal. All of those different things factor into which indicators and the number of indicators that you decide to use on your chart. But for the most part, that's what indicators are. It's tools to assist you to measure and to forecast. Right, so let's hop back into our presentation. So again, indicators help you to measure and forecast the trends. Any questions on anything that we covered today? All right, this is the gifted class. Everyone masters the content as it is presented. Your homework for today, please study your live candles for about 20 minutes. And I want you to record patterns that you saw forming on the chart and or patterns that were already there when you began to study the chart. And be prepared to discuss your findings on tomorrow. So whatever you see, be prepared to discuss it because we want to move into discussing actual trading and how to be good at it and actually making a trade. So we're going to start making the trades based on the patterns that we recognize on the charts. So we know our bullish patterns we buy, our bearish patterns we sell, and we discuss support and resistance when we're bouncing the basketball down, when the basketball hits the basketball court, that it finds support on the court. And when it bounces back up to our hand, the ball finds resistance at our hand, okay? If there aren't any questions, then again, I am being respectful of your time. This is day 3. We will call it a wrap. And same time, same place on tomorrow. Have an amazing evening. You are welcome. You are welcome.